Today we're going to look at our debit and credit worksheet. In looking at this worksheet, you should have already watched the worksheets that explain what a debit and a credit are. So if you haven't watched those lecture videos yet, make sure you go in and you watch those lecture videos to try to help understand some of this information. So when we look at this information, what we see is that debit means is abbreviated DR, and it means left. Credit is abbreviated CR, and it means right. And so when we look at these debits and credits and we look at our accounts, each account is going to have what we call a normal balance. And the normal balance is how you actually go in and you increase an account. And so what this kind of looks like and what we look at with it is we look at what we call a T account. And we notice that the T account has a left side and the T account has a right side, which means that the T account has a debit side and the T account has a credit side. So as we had talked about before, things that you can do with these debits and these credits, you can remember the Y3. And so with Y3, that does go into that expanded accounting equation, which is assets equal liabilities plus owner's equity plus revenues minus expenses. And so when we look and we do the Y3 with our fingers, you know, what we have is we are looking at our hand here with the Y, and then we are looking with our hand here with the 3. And what we see here is they do correspond with these different items. So we have assets, liabilities, our owner's equity capital account, our revenue account, and our expense account. Same thing here, assets, liabilities, our owner's equity capital, our revenue, and our expense account. And we do this with our left hand and our right hand. And when our fingers are pointed up, that means that's the side that they increase on. If your fingers are pointed down, that means that if it's on that particular side, that is how it would decrease. So when we look at this, what we find is that our assets and our expenses increase on the left side, so they have a normal balance that would be a debit. And our liabilities, capital, and revenue increase on the right side. So they're going to have a normal balance that is on the right side as a credit. The only thing that it doesn't let us know is that drawing account. And just remember that the drawing account is where the owner takes money out of the business, and the capital account is where the owner puts money into the business. So it would be on that left side. So on the left side we have the aid, and on the right side we have the LCR. So now we can go in and we can see what these different accounts are, and we can figure out what their normal balance is. So for our cash account, cash is an asset, and an asset increases on the left side, which means that it is a debit. Accounts payable is a liability. Liabilities increase on the right side, which means that it is a credit. Then we have sales. Sales is a revenue account, and if we look, revenues increase on the right, and in this case our R's stay together. Revenues increase on the right, which means that they are a credit. We have our rent expense, which is an expense account. With that expense account, expenses increase on the left, which means it is a debit. Inventory is an asset. Assets increase on the left as a debit. We have supplies expense, so this is an expense. expense increases on the left side, which means it's a debit. We have revenue. Revenue increases on the right as a credit. Wages payable is a liability account, and our liabilities will increase on the right as a credit also. Then we get to capital. So if we look at capital, capital is going to increase on the right because that is one of our items, and therefore that is going to be a normal balance of a credit. We have wage expense, which is an expense. Expenses increase on the left, which means that's a debit. Prepaid insurance is an asset. Assets will increase on the left side as a debit. Drawing is here, and so that is going to increase on the left as a debit. Office supplies are an asset. Assets increase on the left side as a debit. Fees earned is a revenue account. Revenues, remember revenues are right, and that's a credit. And for our fee expense, it's an expense. Expenses increase on the left, and they are debits. Land is an asset. Assets increase on the left as a debit. Unearned revenue is a liability. Liabilities will increase on the right side as a credit. Buildings are assets. Assets increase on the left. They are a debit. Accounts receivable is an asset, which increases on the left as a debit. Then we get to our patent. Patent, remember, is an intangible asset, so that's going to increase on the left as a debit. Unearned fees is a liability. Liabilities increase on the right as a credit. Insurance expense, expenses increase on the left, and therefore that is a debit account. Notes payable, it's a liability. Liabilities will increase on the right side. And if you're looking at your fingers, remember this is your liability. So that finger's up on the right hand, and so that is going to be a credit. Copyright is an asset. That's here. And so that means that is on your left hand. And so that is a debit. Equipment is also an asset, so that's going to be left, debit. Fees, revenue. Revenues are on the right, and they are a credit. So that is how you go through and you look at all of your accounts and figure out what the normal balance is. The thing to remember when we look at things like Y3, assets, expenses, fingers pointed up, that means that they would increase on the right, left side, because that is your left hand. And on this one, you have these fingers up, so you have liabilities, capital, and revenue, and the other fingers are down. So I have my asset and my expense down, which means they would decrease on that side. So those are just some things to remember and to think about. And so I would just say practice these. You would have some work to be looking at, and you also have a quiz on this, so make sure that you understand everything as far as what your debits and credits and what's your normal balance for all of your different accounts. Again, it's very important that you understand your account classification. If you're still unsure about how we classify accounts, then I would suggest you go back and you look at the account classification video one more time.